Can you hear me? Can you hear me clearly now?
Yes, I can hear you, sir.
Can you see my screen?
Yes, 100%.
Yeah. So now if you find a situation where the area of liquidity that you are supposed to use on confirming liquidity flow has already been consumed by the liquidity, so now you have to use the liquidity engineering in order to confirm the liquidity flow. So then after now, you have to wait for the market to tap to that engineering liquidity. As you can see, the market came, then after the market tapped to that entry point. So don't enter here now, don't enter this area. You have to wait for shift in as usual. So now this is my shift, as you can see here. Also, I had two formations, which were the type 1's formation, as you can see, the type 1 formations, both this one and this one. But as you can see now on this example, the market tried to consume the inside formation. As I told you before, if the market performs this, you have to consider, you can actually consider that areas that actually left on. If you're considering this area, you have to wait for the market to, you have to consider the areas that are actually lefting on this exact point from this point right here. So now if I come to find my liquidity engineering on 15 minutes time frame on this, on the areas on the liquidity that are actually left now, what you have to do now is actually you have to be careful, because a lot of people, if you ask them what type of liquidity engineering could you use on this exact scenario, someone will tell you, I can use this. Actually, it's correct, but from this case, it is not, because we have used liquidity engineering to confirm the liquidity flow. So we have to make sure that the liquidity engineering that we are going to use, it is a complete liquidity engineering, and also it has to close below the bodies. For example, we have to close below the bodies. As you can see here, the market actually didn't close below the bodies, as you can see. But now here, now the market actually came and closed below. So now the liquidity engineering that we are going to use on this certain case scenario, we are going to use this as our engineering liquidity, or our point of entry. And the risk was almost, let me try to measure it, almost 12.7 pips. So the market now came later on, came and tapped my entry point. Now that is the place where you have to enter your pending order. Now you are going to hold that price. You're going to hold as long as you can. Just don't let emotions take over. Just hold the price. Let me go to the data so that I can speed up this simulation. As you can see, the market actually rallied, and it continues to rally just like that. As you can see, market went up almost, how many pips? Let us count. Almost 1,488 pips. You can actually capitalize those. So this is how we trade the liquidity flow confirmation. If there's any question before I move to the second agglomeration.
I know. So far, nothing yet.
Okay. So let us now go to second agglomeration. But before I go to the second agglomeration, I have to address something first. I have to address to you the cycle of how we trade or how we do this. So now, for example, you have some certain case like this. Maybe, let's say the market has shifted to the monthly time frame. Maybe something like this. The market has performed a shift. Then after the market has left us an area of liquidity like this one. Here, what I'm trying to explain is the market cycle, how to observe these cycles. So now, in order for the market to come down, because we as traders, we don't have to wait for the market to come here now so that we can take our entries. We have to know on how to drop with the price to this exact point. Then after we will close the sales, then after we can take the buy. So what we have to do we have to wait. For example, this is monthly time frame. We have to wait for the shifts to happen on daily time frame. That is the situational time frame from this cycle. So in order for you to know that now the price is going down, to follow this area of liquidity that actually performed on the monthly time frame, you have to see something like this on daily time frame, the shift on daily time frame. But bear in mind and remember that when we actually shifted on this daily time frame, we also left an area of liquidity, as you can see. This is my area of liquidity on monthly, but also I have this area of liquidity on what? On daily. And also remember that the market is a slave to liquidity. So we also must have to come to this area of liquidity first from daily to tap into it and to clear these liquidities all over the place. Then after now, we can go to this area of monthly liquidity. But also remember, in order for the market to come to this daily time frame, the market has to shift to 1 hour time frame. To 1 hour time frame. This is my shift, and this is my what? My area of liquidity from 1 hour time frame. Market is a slave to liquidity. The market has to consume all of the liquidities before it can go down. So as you can see here now, we have already shifted from 1 hour time frame, but also the market has to come first to clear these liquidities that's actually available on 1 hour time frame before it can come to actually consume these areas that are actually located on the daily time frame. So now we have to shift to 15 minutes time frame. Yeah. So now what actually happens is that the market now comes, clears the 15 minutes area of liquidity. Then after clears the 1 hour area of liquidity, then now the market goes to the daily time frame to clear the liquidity. Then after the market comes now to the monthly area of liquidity. So now this situation actually it looks like this on monthly perspective, but now on those lower time frames, it looks like this as I have illustrated on this exact point. Let me draw it clearly. As you can see here now. Now this is actually was happening on these areas that are actually somewhere on monthly time frame. So now this is the cycle, and this is what the market actually does all day, every day. So a lot of people are asking me, bro, why are you entering? Maybe you are buying this pair, then after you are selling again. Actually, this is what I'm doing all day, every day. You have to know the cycle you are in. So for example, you enter the market, you start to analyze the charts, but you find yourself that you are somewhere here. So now you have the picture now that I have to buy first before I come and sell this pair. So you have to find some buying opportunities that you can actually buy somewhere there, and your take profit will be on the areas of liquidity from daily time frame, somewhere there. Then after you can sell on this exact point, then after the market can go now to. So that's why a lot of people are finding my entry. Maybe some place I'm buying somewhere here, then after I'm selling somewhere there. As above, so below. That's why I always post as above, so below, because I know what the market actually is doing. I know how the market consumes those liquidities. So it has to happen this way. If there's any questions before we continue.
So, sir.
Yeah, tell me.
Okay, so the green is one cycle, and then the pink is one cycle, and then the black is one cycle, and then the blue is another cycle.
Yes. Let me put it a key. Blue is for monthly. Blue is for monthly time frame. Because as I told you, each time frame has got its own trend. In daily, I mean green now, green is daily time frame. We have to follow that specific cycle. Maybe if you are dealing with the weekly cycle, you have to find weekly, then 4 hours, then 30 minutes. Now the pink is the 1 hour cycle or 1 hour time frame. Then the black, from that perspective now, is the 15 minutes. As you can see, I'm going with the flow of the time frames, as you can see here. So now the market has to perform these shifts, then after the formations, then after the consuming of liquidities before it can come now to the area of liquidity of monthly. And now the blue, that's why I actually illustrated from the blue line that something, you can find something like this. Let me illustrate it clearly. If you go to the monthly time frame, you can find something like this. The market came, then after the market now went up on scenario like that one. But now if you go deep now, if you go within, if you go these areas now, you can find something that like these ones that actually illustrated now from this perspective. So now you can buy on those, maybe encounter trends, you can actually, so this is how I took the trades. This is how I took my intraday trades. I actually took on center of these movements. Actually, this one, I can take this one as my intraday trade. I can take maybe 200 pips, maybe 300 pips. I can show you on, we will talk about it on the charts when we come to discuss the second agglomeration. So if there's another question, maybe before we move into the examples. If there's any other question you can ask.
No, nothing yet.
Nothing yet. Okay, now let us go down to the charts. Let us go and see. So now let us go and look at these pairs. Now starting with GBP USD, as we discussed, let us come now to the month time frame. So now, for example, maybe you come and find out that you are on this situation now. Actually, what you have now is that you have the area of monthly liquidity, as you can see. Monthly liquidity, as you can see. So now, in order for the price to come to this area of liquidity, it has to shift to the daily time frame. So now I'm going to the daily time frame to find shifts, as you can see. So now if I come to the daily time frame, I have to observe the shift. Now on daily time frame, this was my shift point. This was my shift point. After the market actually performed my shift point now, the market now performed another formation, as you can see here. This was my formation. But on this on this case now, first of all, you have to observe here. I actually have to observe two formations because the market actually tried to create a formation within this inside formation, but also the highest movement or the highest momentum movement that actually they came to actually close above this area originated from this structure. So if I were to be stopped out from this structure now, I can consider the liquidity engineering that actually found here. So what you have to do on this scenario now, you have to find liquidity engineering on this specific point. Then after you can, if the market now stops you out, you can come now to find the last ones on this exact point. But now on this second agglomeration, what we actually use, we use the validation to violation analysis based on the normal flow of shift in the normal flow of time frames. So now this is what we are going to do. So now after the market actually performs the shift, now the market has to come down to my area of liquidity before it can continue to go up. So now I come to 1 hour time frame. So when I come to 1 hour time frame, let me now try to remove these ones first. Remember, the market also has to shift to 1 hour time frame so that it can come to the daily area of liquidity before it can go to the monthly area of liquidity. The same thing happens all day, every day. So as you can see, as you can observe now, on monthly, we have something like this. Let me try to do a recap, a small recap. We have this monthly area of liquidity. We came to daily time frame now, we observed a shift. I'm going very slow so that you can understand. We observed a shift with a formation. So now this is the formation that is going to take us to this area of liquidity. But now we have to return also to this formation. So if we have to return to this formation, to this daily formation, we have to shift also to the 1 hour time frame and perform a formation there, that one. Then after we can come and tap it first, then go down, then go up again. Do you get me to that point? So now, as you can see,
Yes,
we have this daily formation, but also if you observe on 1 hour time frame, the market has performed a shift, as you can see here. As you can see, let me try to, this was my shift. As you can see, after the market performed my shift, the market actually formed the 2 formations, and it came and consumed all of the liquidity on those formations. As you can see here, this was my first formation. The market came by liquidity engineering, tapped to this exact point. But even if we miss this entry from the inside formation, we can also take the outside formation on this point here. Now, can you hear me clearly? Can you hear me?
Yes, but you had paused there for a good 2 seconds. Yes, I can hear you clearly now.
You can hear me clearly now. Let me try to fix my network. I don't know what's happening. Let me try to set it to maybe yeah, let me try to fix it. So what now you have to do on this certain example, as you can see now, if you come and find your liquidity engineering on this point here, now this is the entry that is going to take you now to that area of, let me try to go and refine it maybe. I don't know if there's a lot of data. As you can see now, this is my liquidity engineering from 15 minutes time frame, as you can see. Now this is the entry that is going to take me, and the risk is only 10 pips. This is the entry that is going to take me to my daily area of liquidity. To my daily area of liquidity. Let me shift 1 hour to my daily area of liquidity. So after selling on that specific scenario now, when I come to this daily area of liquidity now, I have to find my liquidity engineering also, the latest one. And if you observe clearly now, this entry, I remember this, I took this entry. I actually took this entry on this specific point here. Then after, when I came to 15 minutes time frame, I actually refined it more by putting, I remember it was this point here. It was this point there. So now, after taking your first entry, that is actually taking you down now to the daily time frame. This is your take profit now, 477 pips. This is your take profit. Then after the market reaches to this exact point now, you are going to close those sales, those short that you took above. Then now you're going to buy, and the risk is only 15 pips. I actually use only 15 pips. I don't use more than that, because I believe that if my trades go against me by 15 pips, then I was wrong on that specific trade. So now the market now went down. Market went down. As you can see now, the market, after went down, the market now came and activated my buy. As you can see here, the market dropped from I took the take profits from my selling now. Now the market performed my buy, took my buying entry now. As you can see, the entry was that clearly. Then after now, the market goes to that area of liquidity that is above that monthly area of liquidity now. Here. So now this is your first take profit, but don't close the orders first. You have to observe the daily shift. The daily shift, you have to observe it. So now when I come to daily time from now, the market was actually rallying. Now when the market reach on this exact point, as you can see here, the market didn't perform any shift so far. As you can see, the market consumed the monthly area of liquidity, and did not perform the shift. So this is the green light that we are continuing to hold. We are continuing to hold this price. As you can see, we are going to continue on holding this price now. So as you can see here, the market came again and performed now a shift on this point. Let me stop this simulation. As you can see here, the market now did what? The market now came and shift. So now this is an area where you are going to exit your trades because there are some new participants in the market now. You have to close your trades. So if there's any questions so far on how to trade these foundations and also on how to stock the price by performing on different time frames, if there's any question before we go to another example.
Okay, yeah, it's quite a lot.
Quite a lot. I'll share the video.
Yeah.
You will learn it slowly. You will learn it time to time. It is hard at the first time, but you'll catch up little by little.
Yeah, because some things I'm not yet 100% familiarized myself with. So
Of course, yeah.
as you are explaining, yeah.
Don't
I don't
worry.
fully understand some of them, but
It will reach a time where you can actually explain clearly as I'm doing right now, because I actually started as where you are right now. So after a little practice, you can do it too. Let us go to another example on audio SD now.
Okay.
The same thing happens. Now, if you can see, let me try to cut this ones first. Let me try to cut this. Yeah. So now maybe at the moment you have your monthly area of liquidity, which is here now. You don't have to wait for the market to come to this area for you to trade. In order for the market to come here now, you have to actually look for the shift on daily time frame. Now this is my daily time frame, as you can see. And my daily time frame, the market performed the shift here on this point, as you can see. Then after, the market left me two formations, inside one and an outside one, but the inside, the market tried to wash it. So if I were to deal with an inside formation, I would have to deal with the area from this point here, from this point here, because these are the actual liquidities that are left. But also, if I have to deal with an outside formation, I could put my liquidity, I could put my validation point there, then after I can put my validation on this point here. So now let me try to now go and now as you can see here on this exact point, let me try to cut it again. Now, if I come to 1 hour time frame, I have to observe also a shift that will lead me to this area of liquidity. The same case applies all day, every day. So now if I come to 1 hour time frame now, if I come to 1 hour time frame, as you can see here, the market actually performed a shift, as you can see. Then after, the market left me a very huge formation. Let me try to draw it by black. A very huge formation. Then after, if I go out for 15 minutes to go and refine that entry, as you can see, the market was actually liquidating a lot here. So what you have to do, you have to find first the clear zone. If I were to find this was not a clear zone, this one, because it was actually washed. Let me try to find another zone. This one maybe. Let me try to check this one out. As you can see, the market came and tried to clear it again also before leaving the area of liquidity. But now this is my area that is actually left on this zone. But also I have my liquidity engineering here, as you can see. So this, I can use this one as my entry point. My liquidity engineering, I can use it as my entry point. Then after, the market now will go. Now this is my entry that is going to take me to the daily area of liquidity. As you can see, later on the market came and tapped, as you can see, and the risk was only, even if you put 15 pips, actually you are safe. Now this is my entry that was going to take me to my daily area of liquidity. As you can see, the market came. As you can see, the market now came down. Before, let us now go to refine now on this side, on this side right here. So after taking your sell on this exact point now, the market comes down. You have to find liquidity engineering now for buying scenarios so that you can actually go out on those selling entries. So here, as you can see, there were no any clear liquidity engineering. As you can see, the market actually performed a shift here. Then after we had this formation, so this was my liquidity that was also washed out, as you can see. So that means that the area that is actually left is this portion from this portion right here. So this is the portion that is left, the portion that the liquidities are almost available, because if you observe clearly, we have washed a lot of liquidities. We had this formation, we washed it, we actually consumed it. We had this formation also, the market came in, tried to consume it. We had also this formation here, this type 1 formation, the market came and consumed it. So this was my zone that was actually safest one. So I could put my entry there, then my stop loss below, almost 7 pips. So the market now came, as you can see, the market continued to wash the liquidity as it goes up on this exact point, as you can see here. The market continued to wash the liquidities. So this was my safest zone. The market came later on. Now this is your take profit. Actually, this is what you have to put your take profit on this point here. Almost intraday pips, 206 pips. Then after, you're going to put your buying positions now on this entry here, so that we can go now to the monthly area of liquidity. So the cycle is actually how it works that way. Yeah. And this was almost 8 pips. This was almost 8 pips. So now if I place the price, the market now came, tap to my entry point, as you can see. So now I'm out on the selling positions and my buying positions are actually activated, as you can see. Activated. Now my first take profit is here now, 600 pips on the monthly area. The market is a slave to liquidity. The market has to follow where liquidity is. So now that was my take profit. Now let me try to go on daily time frame so that I can speed up this illustration of this simulation. So as you can see, the market came. You can see the market came now. So now, the market now is sometimes the market can be very tricky. As you can see here, the market tried to shift here. But if the market now shifts, the market didn't leave any formation. So this is a trap. This is not a complete shift. This is a transition. So you have to be aware of things like this. Don't let this concept take you out of your trades, out of your winning trades, because this is just a transition. It is not something like this, because there's no liquidity here for us to go down again. So you have to observe areas like that. So as you can see, the market now will continue to rally. Yeah, continue to rally. Market going to rally. As you can see, the market came now, try to consume. Now the market actually shifted, as you can see there. So now we are out. We are actually out on somewhere there, and the pips was almost 725. It was a swing trade. And also, it doesn't mean that you don't have to trade these areas inside. You can actually find now those areas of maybe areas like maybe type 1 or some continuation shifts that are actually continuing to happening on that specific cases. But as you know, the market has to come here first before it can start to go down again. So that is how we trade that situations. Another example, we have this Audi CHF. On Audi CHF, let me try to cut it somewhere here. Okay, so now here I'm having this as my area of liquidity at the moment. This as my area of liquidity at the moment. So now when I come to to my daily time frame, the market has to perform a shift so that it can come upside. So as you can see here, this was my shift point. This was my shift point. As you can see here, this is my shift point. So now after the market now performed my shift, as we can see, the market now came, and as you can see, we had this area of liquidity. And this area of liquidity is the one that is supposed to take me to my movement from the upside to this area of liquidity. But now I actually put this example. There are some things I have to clarify. Now let us go to 1 hour time frame now so that we can see. We had this liquidity engineering. Actually, it was on 15 minutes time frame. I actually refined it more. On 15 minutes time frame, we had this little hidden liquidity engineering. We had this one, hidden liquidity engineering, because there was a lot of commotions. The market came later on and tapped the entry. We took this entry, but the market didn't hold a lot of that entry because there were some shift. But now I actually didn't take this. One of my friends, I actually had an argument with one of my friends because that friend of mine uses shift based on line graphs. And based on his ideas, on this exact point here, he was saying that the market actually was shifted on this point. And this was his formation, his inside formation. So I said, maybe, but now I took my trades, I took my buying trade right there. Then after, the market actually came and I was taken out by some pips. I actually, after the market now shifted from 1 hour time frame, I went out, but his entry was activated based on the shifts that actually, yeah, these line graph shifts. I don't mean that I don't use these line graph shifts, but the line graph shifts I actually use them maybe sometime on 1 hour time frame, because on 1 hour time frame there's a lot of noisy, but I know on how to filter them because I use shifts after the market has closed above or below the swing point of daily. So as you can see here, this was actually observant. The shift based on line graph was at that point, and the market actually came. And the market took this liquidity engineering as usual. So that friend of mine continued to laugh at me. Oh, you didn't take the trade. I told you there was a shift there. You didn't consider it. Look at us now. We have made a lot of money on this trade. The market actually came and activated the entry, as you can see there. Now the market went down. It went down. So they were just laughing at me. I said, okay, it's not the case, because I use what I always use. I use the confirmation of shift. I don't trade shift based on specific time frames. I use shift based on all of those time frames. So the market went down, but also now the market came again, and the market performed the shift that I was waiting for. As you can see now, this was my shift. This was my shift. I had the shift there, and this was my formation now, my inside formation here. So now when I come to 1 hour time frame to try and refine this entry, let me try to fix my screen. I can see something is off. Let me put it to 100. Yeah. So when I come now to 1 hour time frame to find my liquidity engineering on my inside formation, this was my liquidity engineering here, clearly a clear liquidity engineering. So I put there my risk was almost 5.8 pips, 6 pips. Thereafter I waited for the price to come. Price came, tapped my entry. It was the 0 drawdown entry. Then now I started to laugh at them again now, because my entry was actually activated. Then after I came out and took off based on an area of liquidity that was actually presenting itself here on this daily. So I took off my trades somewhere there. Then after the market continued to go up, I remember. So I was out. I actually banked some pips, but for the individual that actually hold this price, almost went out to 363 pips. So now, as you can see now, this is the true shift, because it is the shift that actually driven the price up to this monthly or nearest to the monthly area of liquidity. So that's how we deal with situation like that on this, what we call violation to invalidation or violation to violation. Let's take another example from Euro USD. When I mark to monthly, as you can see here. So, but I think this meeting almost has 3 minutes. Let me send you another link so that we can finish off these two examples that are actually remaining. That way you can continue. Actually, the session today is very long.